All right, here is Sasseur REIT's CEO, Anthony Ang. Of course, Sasseur REIT is an outlet mall REIT, first to be listed in Asia earlier this year. And here to tell us more about Sasseur REIT is Anthony. Anthony, walk us through this concept of an outlet mall REIT. What do people expect?
Okay, well, this, as you mentioned, this is the first outlet mall REIT to be listed in Asia. And most people will be familiar with outlet, right? Many of us have been to outlet. And the outlet industry in China is quite new. It's about 12 years old. And Sasseur REIT actually took 4 assets out of a total of 9 assets that belongs to the sponsor, Sasseur Group, to be listed as a REIT in Singapore.
So 2 in Chongqing, 1 in Hefei, and 1 Kunming.
2 in Chongqing, yes, 1 in Hefei, 1 in Kunming, and the total AUM is about $1.5 billion. We, as you mentioned, we actually got listed earlier this year, raising about $400 million.
So this outlet mall, what type of tenants, brands does it typically attract?
Well, obviously, you cannot be a serious outlet if you don't have international brand. So obviously, we have international brand. We have all the attractive, fashionable brand, trendy, the up-to-date brands. But they also include Chinese brand because obviously they are good Chinese brand, and the Chinese, in this case, talking about the Chinese middle class. They love not just the international brand, but they are a good local brand as well. Yeah.
Okay, so we mentioned 3 cities: Chongqing, Hefei, and Kunming. Why these 3 cities? What's the potential of it?
The company started in Chongqing because the founder, of course, was a professor, art professor in Chongqing. And therefore, he started the first mall in Chongqing. And the other mall in Bishan is actually in the suburb of Chongqing. And the other 2 malls in Kunming and Hefei, of course, these are second-tier city. The reason, so generally we say that we like to target second-tier city. And the reason is because second-tier cities are the fastest growing in terms of the middle class, in terms of their consumption, the expenditure capacity. So this is a place where we find that we are able to go in there. We usually are the first mover. We are able to obtain, to have a so-called low entry price. And that has been a very important factor for our success.
Yeah, there's a very interesting thing about your rental model. It's based on business sales rather than the normal lease, which is based on, I guess, flat fee?
Yes, it is really quite unique, and they make it work in China. What happens is that the brands, the brands that are tenant in our mall, they don't pay rent. They actually just pay a commission. So we call it if like 100% turnover rent, and about 80% of our tenants are brand. So about 80% of therefore of our rent is in the form of turnover rent. And what is good about this model is that it actually aligns the interests of the tenant with the landlord very much, because the landlord's income is based on the sales of the tenant.
So you're invested in their
They're
success.
invested, and in some sense, people call it even a joint operation kind of concept, where you're actually jointly trying to operate the mall, bringing the crowd so that the tenant will be able to enjoy good sale, because they have good sale, we have good income.
Right, Anthony, some of your strategic investors include LVMH and Ping An Real Estate. What type of strategic value does it lend to your REIT?
That is actually an important point, because it is obviously a very important endorsement of Sasseur Group. A lot of investors, when they come to a Chinese company, they are not very familiar. In this case, actually it's L Catterton, which is Louis Vuitton L Capital joint venture with Catterton of the US. It's a big private equity fund with about, I think they are asset under management nearly $3 billion, investing in Asia. And then Ping An, they actually invested in Sasseur Group about 4 years ago. And they obviously, between L Capital or LVMH and Catterton, they own 200 plus brands. So obviously there's value there. After all, we are in the business of selling branded product our season. And then Ping An, of course, is a big player in China. They're able to obviously help us with the necessary connection in terms of location for new malls and so on.
Okay, so very big backing from some of the big players in China.
Absolutely.
So Anthony, Singaporeans love to invest in REITs, right?
Yes.
But some of them are a bit skeptical when it comes to REITs with foreign assets. How do you address these concerns?
Yeah, it's a challenge because obviously I talk to investors that we have to consider we are not just overseas. We actually there's this China factor, if you like, and then people are always concerned when you have assets overseas. There's political, there's regulatory risk, and therefore generally what happens then is the investor will then demand a higher yield for REITs with assets outside the country. But I always emphasize that for Sasseur REIT at least, you are thinking about a few things. Number one, you are thinking about a REIT that's listed in Singapore, so it's very well regulated. You are talking about a team that's running the REIT that's all Singaporean professional, very experienced. You are talking about having an exposure to the fastest growing retail segment in China. And normally when you invest in even in listed stocks, you say, is this a growing business? Fastest growing retail segment in China. And it is anchored by the leader in the field in China, which is Sasseur Group. It's the #1 outlet operator in China. And then the yield is fantastic. The yield of the current price now, in fact, is 8.2, 8.3%. You can't beat that.
Right. So in a way, it gives investors a new market to tap into. But
Absolutely.
one risk that they also worry about is foreign exchange risk. How
Yes.
do you manage that?
Well, it's fairly standard. We obviously, one of the functions of the REIT manager is capital management. So we obviously look at appropriate way to, suppose say when you're doing acquisition, appropriate combination of debt and equity, and then we obviously have hedging policy. We have, with respect to say interest rate as well as forex exposure.
Okay. It's been actually 6 months since we last spoke,
Yes.
Anthony. So how have things changed? We've got US trade wars happening, and you've got Chinese economy maybe slowing down even more. How is this affecting your business?
I think that part really don't really affect us. Why? Because number one, I think if anything, the trade war may actually help us because the Chinese government is actively trying to encourage the Chinese to spend more locally now. So we are focused on the middle class expenditure in China, so it will benefit us. But the key thing I think is resilient. Outlet business is very, very resilient. In fact, there's a very well-used saying that when the times are good, people like a bargain. When times are bad, people need a bargain. So outlet is a place to go when times are not as good. And having said that, the industry is growing at 25% a year. So I don't think there's any problem that we can expect from this current situation between China and the US. We're not concerned about that.
Thank you so much, Anthony. This is Anthony Ang, CEO of Sasseur REIT, speaking of us at Money FM 89.3.
Thank you.
Money FM 89.3.